Good evening, everyone. Welcome. I am Agnieszka Wood, a trader, trading mindset coach, and a founder of a head coach. And I am really happy that you are here with us tonight. And I'm joined by two people that I deeply respect and admire, Dr. Brett Steenbarger and Peter Robbins. Brett and Peter, thank you for being with us here tonight and being willing to have this conversation with us. I'm really, really appreciative of your time.
Thank
The,
you.
You,
the
Agnieszka.
idea for tonight started with the question, why do some traders consistently perform at the higher level than others, even though they are looking at the same market, the same information, and the same opportunities? And the answer that you will hear very often is emotional control. And for sure, emotions are certainly playing a role in trading, but they are usually only something that we see on the surface. And underneath them, there may be lack of alignment with your strategy, for example, or difficulty executing your plan under pressure, or resistance to doing what we already know is in our best interest. And very often it is all of the above. So tonight we want to look beyond the simple answer of just control your emotions and you'll be fine, and explore what is actually shaping your trading decisions. So we'll begin with brief introductions, and Brett will speak about some of the issues that he's seeing most often in his conversation with traders and the role that execution plays in trading psychology. And then Peter will talk about the importance of being aligned with your strategy and why that is so often one of the first hurdles that traders need to address. And then I will speak about why traders can experience so much resistance when they are trying to change their behavior, even when they genuinely want to change. And then from there, we will move into your questions. Without further ado, Brett, Peter, thank you again for joining us. Brett, I will let you begin.
Great. Thank
It's
you
yours.
very much, Aska. I appreciate the opportunity to be here with everyone. Just quick introduction. My name is Brett Steenbarger, and I'm a psychologist. I teach at a medical school in Syracuse, New York. And for how many years? Going on 30 years, I've been working with professional traders in a variety of markets. Um, Most recently, working with a number of the better known hedge funds. So I get to see up close what people are doing who are successful and how they do it. Let me mention, just as a preface, this week, one of the people who was most inspirational to my career passed away. His name is Victor Niederhofer, and he wrote a number of good things, including the book Education of a Speculator. And he taught about what he called ever-changing markets, that markets are never constant. They're always changing in their direction. They're changing in their volatility. They change in their correlations to other markets. And a really good trader is one who can make sense of these ever-changing markets. When I first met with Victor, he was listening to classical music and relating the structure of the classical music to the structure of financial markets. Just an amazing mind, and I'm sorry to see him go, but I recommend everything he's written. He's a real inspiration, particularly for those of us who are inclined to not just get new ideas, but actually test them with historical data. Okay, just a few comments about the current market situation. We've had we've had a really interesting set of markets, in the stock market, particularly because of the ups and downs of the conflict in the Middle East. And we've seen buying, and selling, and we see the volatility. And most recently, there were indications that the conflict could come to an end, and the market, which had been coming down, just has ripped higher. And that has surprised a number of traders. So we are at a very interesting point here because a number of indexes have gone to new highs, like the S&P 500, the NYSE index. But a number of sectors of the stock market have not gone to new highs. Look at consumer discretionary stocks, XLY. Look at consumer staples, XLP. Look at communication stocks, XLC. There are many sectors of the market that have not gone to new highs. In fact, every single day I track the number of stocks on the New York Stock Exchange that make fresh 1 month and 3 month new highs and new lows. And after this big run up to new highs, what do we have? 709 stocks out of the 3,000 plus have gone to 1 month highs. In other words, it has not yet been a broad participation on the upside. So we're at a real choice point here. Is this a valid breakout, and do we want to keep going with it? Or could this reverse on us? It takes quite a bit of flexibility. The new book that I'm writing, I review all of the Market Wizards books and try to identify the common themes of what makes great traders. And one of the themes that I identify is what I call flexible conviction. Now, that's a little strange because we usually think of conviction as being grounded in your idea. But this is flexible conviction, the ability to have confidence in a view, to have a distinct view, and to see that it's working and to go after it, but then flexibly to see when it's not working and be able to adjust and go the other way. That ability to flexibly move with the market at the same time that you can have confidence and conviction and really make the most of ideas that are playing out is a unique set of cognitive psychological skills. And it comes from being immersed in markets day after day, year after year. One of the common themes among the market wizards is that they have spent hours and hours and hours and hours every single day tracking markets, and then after the market closed, replaying markets to look bar by bar by bar and internalize patterns. And as a result of that intimacy that they have, seeing so many markets in such detail for so long, they're able to not only have confidence in their views, but to see subtle signs when those views are not playing out and have the flexibility to go the other way. We're at a choice point here in the U.S. stock market where it could continue higher and breadth could improve, and now we're looking at a new uptrend, or it stalls out here, and all of a sudden, it looks like a longer term topping pattern. The ability to keep different ideas in our head and flexibly move from one to the other is something that could make us market wizards.
Thank you so much. And I also want to say I'm truly sorry for your loss. This is a loss, not, I think, just personal, but for trading industry for sure. So it's always sad to see that someone who has delivered so much value to the industry is leaving us. Thank you, Brett and Peter. I will ask you for a short introduction.
Anyway, thanks, Brett, for that. I'm sure we're all looking forward to your next book that you're talking about, but you didn't mention your current book that was recently published, Positive Trading Psychology and Turning Personal Strengths into your trading strengths. And, amazing book. If you haven't read it, definitely one to put on your bookshelf. And it'll tie in a little bit with what I'm going to talk about. But again, quick introduction. Peter Robbins, my name. I've been a financial professional all my life and traded all my life as well, whether sometimes full-time, often part-time with a career. And yeah, I live in Canada and looking forward to tonight's conversation. So again, thanks, Brett. And, it's always enjoy hearing your perspective because you spent so much time working with professional traders, right? I know most of my experience has been with retail traders, and I'm a retail trader myself. And one thing I've noticed over the years is that many don't struggle because they lack knowledge. They struggle because they can't consistently execute what they already know, right? And before we ask whether we're executing our strategy well, and like you talked about, most traders are surprised most of the time, and that ability to be flexible and be able to sort of go with the punches, is a important emotional skill to have. But again, before we look at how well we execute, I want to talk a little bit about a much simpler question, which is the strategy that you're trading right for you, right? Is this actually the right strategy for me, what you would ask, right? So again, after more than 50 years in the markets, it's a long time, I've become convinced that many traders who believe that they have a psychology problem actually have an alignment problem, right? And you don't hear about this very often, but the reason is simple. And I think, Agnieszka, you called this talk sort of, you can't outperform who you are, right? And I mean, it sort of speaks to that, right? And again, the goal isn't to find a strategy you can live with. It's to find one you can execute consistently over the years, right? And so, you may understand your strategy, your rules. They know the strategy has a proven edge, but if the strategy does not fit their personality, their lifestyle, their risk tolerance, their experience, the available time. Brett, you mentioned these market wizards are spending literally hours and hours and hours every day looking at the market in order to internalize sort of patterns and give them their edge, right? But anyway, if it doesn't fit, you're executing it consistently will always be difficult, or it's a sort of first stumbling block out of the gate, right? And I know for myself, one of the biggest mistakes I see, a lot of traders ask me, what's the best strategy, right? And you always hear this all over the place. What's the best? What's the best? And it's like, again, it's not the right question, right? There are successful scalpers or successful day traders, swing traders, momentum traders, and all sorts. And I know, Brett, if you're going over all these market wizards, I know when I've read all the books in the past, what always surprised me is just how many different approaches there are to trading, right? It just blows the mind, right? How it's infinite number of things and how people can find their niche and find, what works for them, right? And again, they're all valid. The better question is, what's the best strategy for you, right? So I often compare this to sports. I use a sort of a sports analogy, right? So you could have like a world-class marathon runner and a world-class sprinter, right? Both are incredible athletes. But they require very different skills, training, and mindsets in what they do, right? So if you asked a marathon runner to race 100 meters, they're probably going to lose, or it's going to be difficult for them. Not because they aren't disciplined, not because they aren't talented. They're simply competing in the wrong event for them, right? And trading is exactly the same. So the mistake is assuming that because a strategy works for someone else, it will automatically work for you. And the same thing with those market wizards. You can read anyone, and it's like if you try to do what they are doing, if it's not right for you, it's not going to work, right? So some people absolutely thrive, as an example, making quick decisions all day long or staring at the screen all day long, as you mentioned. They love the pace, the pressure, the constant action. Personally, that's not for me anymore. Years ago, I did day trade futures. I enjoyed it at the time, but over the years, life changed, my career changed, my family responsibilities changed. And honestly, I change. People change over time, right? Especially as you're trading and going through all these different market environments, you figure things out. Personally, right now, I primarily swing trade US stocks and options and trend trade ETFs. And, so that's sort of, again, not because I think that style is better, but it just simply fits me better, right? Fits my schedule, it fits my personality, and the way I think and make decisions, right? So again, it took me years to realize I didn't need to be someone else to succeed. I needed to become a better version of the trader I already was. So figuring out what you are and how you are going to become a trader is important. So alignment is not, and again, I just mentioned this, because I've been trading for so many years, changed all sorts of times, right? Alignment is not a one-time decision. What fits you at one stage in your life may not fit you 10 years later, even a year later. And again, and I think something that many traders overlook. They spend years trying to become the trader they think they should be, instead of becoming the trader they're naturally suited to become, just like the athlete, right? Whenever someone asks me what strategy they should trade, I encourage them to ask themselves a few honest questions, right? How much time do you realistically have to spend on your trading? How much uncertainty can you comfortably tolerate? What's your risk profile? And does this strategy fit the way you naturally make decisions? And perhaps one big question I'd ask is, did you choose the strategy you're currently trading because it fits you, or because someone on social media made it look exciting, or some book you read? Like you say, all these market wizards, you can pick any type of strategy, but it doesn't mean it's going to work for you, right? So even a great strategy won't produce great results if it doesn't fit the person that's trading it. Now, that doesn't mean we shouldn't push ourselves. I mean, again, you're going to be challenged no matter what strategy is. It may be an alignment issue, but it may not be. So, trading absolutely requires us to become more disciplined, more patient, more self-aware. But there's a difference between growing and constantly fighting who you are. So I found that when your strategy aligns with your personality, your lifestyle, your goals, your strengths, something interesting happens. And that trading actually becomes simpler. Not easier, but simpler. You're no longer trying to force something that doesn't fit. Instead of constantly fighting your strategy, you're working with your strengths. And that's, I know, the positive trading psychology book, Brett, that you wrote, you talk a lot about working off your strengths and building off your strengths, right? And that's where the real psychological work begins, right? Because once you've found a strategy that's aligned with you, who you are, then the conversation, it shifts from who should I become to how do I consistently become the best version of the trader I already am. So one of the favorite lines, I forgot to mention at the beginning, I'm also a writer, and I've written a book that was recently published called The Trader's Journey. And so one of my favorite lines from The Trader's Journey is that the strategy is only as effective as the trader executing it, right? So even when we're aligned, we're still going to make mistakes. We'll still have losing streaks. We'll still doubt ourselves from time to time. The difference isn't whether these things happen. The difference is how we respond when they do. So Brett has showed us how professionals think about execution. I've talked about making sure that your strategy you're aligned to your strategy. And once these two pieces are in place, now Ignitia is going to show us how compassion helps us to stay on that path when we're inevitably tested, right? And we're tested every day, but so that's, again, the consistency and being able to be a consistently profitable trader comes in. So
Thank you so much, Peter. Really appreciate it. So a few words about me. I see a lot of faces in the audience, a lot of my students, but for those of you who do not know me, I am Agnieszka Wood. I'm a trader. I started trading in 2010. So it has been 16 years now. Since 2019, I also coach traders from the mindset perspective and help them break the cycle of repeating the same patterns and get on the path of calm consistent and confident trading. And basically, if I would say it in one short sentence, is to do what you know you should be doing. So this is where the biggest challenge seems to be for many traders. And I have experienced it myself in the past. We all know what to do. We have the knowledge, but somehow we cannot make ourselves do it. Brett was talking about being able to adapt to the changes of the market. What happens actually when the market changes? But what happens when emotionally we haven't moved on with it? Because that's a problem. Because even when we have the strategy that is aligned with us and we understand very well what good execution requires from us, there is still the challenge of staying aligned when the market is no longer doing what we wanted or what we expected the market to do. And this is something that I've been thinking a lot about over the last few weeks, especially seeing how the market, how the conditions were shifting. Something that was working once just stops working. And the trades that are initially looking promising, suddenly they're no longer behaving like as we expected them to. So the market receives new information and adjusts and moves on. But the problem is that we don't always move on with it. And the price is trading in the present moment. The problem is our mind may still be negotiating with the past. And we still may be holding to the original idea that we had about, our trade, our entry price, or the profit that was there just a few minutes ago, but might be disappearing, or simply that the outcome that we thought was supposed to happen is now not happening. And I think this is where many traders begin to get into trouble. And the common explanation for this is, well, emotions took over and I just lost control, or maybe I just need to be more disciplined. And I see it that the problem actually starts a little earlier than that. It starts with resistance. And not many people really, first of all, know what resistance is or how to identify it, and then what to do with it. And we have a lot of resistance as people, but also as traders. Resistance to the fact that changes happen. The resistance to the fact that the setup has changed, and to accepting that the trade might not be working. The resistance to let go of the profit that was already there, but now it's not there, but you're still trying to recover it. Or maybe resistance to accepting that something that you really wanted is simply not going to happen this time. And just notice what happens even when you're listening to this, because this is something that we are experiencing every single day as traders. And often we create a lot of pressure for ourselves just simply by wanting what was happening to be different from what is actually happening. And I think that many of us can absolutely recognize ourselves in that. Am I right? You don't have to put it in the chat. I know that I'm sure a lot of people do, because we don't respond only to the market in front of us. We also respond to our expectations. We respond to our previous experiences, our beliefs, and the picture that we had in our minds of how the trade was supposed to go. And a lot of times we get so hung up on that. And when the reality is no longer matching that picture, then we feel discomfort. And what is being asked of us is to accept that we were wrong, to accept that we have to let go of the profit, of the opportunity, or the possibility that the trade could still maybe become what we wanted it to be. And of course, the brain doesn't like those things. So it just makes us feel like keeping the trade open, let's say a loser, keeps the possibility open, possibility of still recovering it. And that as long as we don't close it, that there is still a chance that we won't have to fully accept the outcome. But the thing is that avoiding discomfort actually it's not removing it. Very often it turns this brief moment of discomfort of accepting the situation into a much longer and much more expensive experience. We avoid the discomfort of taking the planned loss, and then we find ourselves holding a much larger one. How many times did that happen to you? A lot of times we'll avoid admitting that the conditions have changed and then spend the next hours watching every single tick, hoping that the market is gonna finally give us a way out. Or avoiding feeling disappointed just for a few minutes and then spend maybe next several days dealing with the drawdown that, of course, we get as a consequence. So we may act as though we cannot tolerate discomfort, but in trying so hard not to feel it, we actually end up creating much more of it. And this is why I consider adaptability such an important part of emotional management. Not adaptability in a sense of changing your strategy every time the market changes, but the ability to update your response with the information that in front of you that changes. Basically, the ability to stay present, to stay current, to allow what you know to become more important than what you believed 5 minutes ago. Because the market moves not only in price, it also moves in time. When it moves and you stay here, you're always behind. And somehow our mind needs to be able to move with it. And moving on doesn't mean that you have to pretend that you're not disappointed about the loss, or you have to force yourself that you don't care. It simply means being able to acknowledge that you really wanted this to work, that you maybe don't even like what is happening right now, and it does feel uncomfortable. But also recognizing that this is the information that you have now, this is what is actually happening, and that you need to respond to it now. And to me, this is emotional management. Not getting rid of the discomfort, but becoming more able to experience it without remaining trapped in what has already happened. Because when we cannot move on as traders, we can no longer trade the market that is in front of us. We are trading the market we wanted to have. And that can quickly become about much more than just one loss. It basically becomes about us at that moment, what we believe and what we believe that we can or cannot do, and what we think that this outcome, this loss, or even a win says about us. And this is how one trade becomes a larger loss. The loss becomes a drawdown, and that drawdown creates even more pressure, making it harder for you to think clearly and execute the next decision well. So in fact, if you think about it, the ability to move forward is not just an emotional skill, it is actually execution skill. And sometimes the most disciplined decision we can make is not to hold on longer to a trade. It is to a trade or to idea that we had. It is to stop arguing with what has already happened, acknowledging that it had already happened. And I would love to go much further into this, but we only got 1 hour. So the main thought I want to leave you with today from this is, you may think the pressure comes from the market is doing, but often much of that pressure comes from your own resistance to what the market has already done. And this is the paradox. We try to avoid the very brief discomfort of accepting reality, and then end up creating prolonged discomfort of fighting it. And if you do recognize this struggle of knowing what your plan requires, but still finding really difficult to follow it and keep going back to what you wish happened, especially under pressure, I will be diving much deeper into this in my free masterclass on August 19, why you break your own trading rules even when you don't want to. And I will show you what creates that gap between knowing what you should do and being able to do it in the moment, especially when the discomfort, pressure, and resistance begin to take over. So, and also what will help you trade with more calm, consistency, and confidence where there's so much at stake. And you can register for free. Vanessa is going to put the link in the chat. And I will make sure that you will also receive more information tomorrow in the email with the replay. So that's what I wanted to add to today's conversation. And ladies and gentlemen, shall we move into the questions?
There are quite a few good questions, and I appreciate that Vanessa has been highlighting those. Let me pick up on a couple of the questions, and I'll kind of go in reverse order, but jump right in, Peter, and jump right in on Ashka. Ms. Gomez says, I have difficulty trading when the market gets in trending mode without reversing. It's a good one, because in the trending mode, reversals are very different than when we're going up and down and up and down within a range. Years and years and years ago, I studied with a group led by the novelist philosopher Ayn Rand. And she taught that whenever we see a contradiction, we should check our premises because one of them is probably wrong. And in this case, Ms. Gomez, when the market is in the trending mode, it does reverse, but they're different reversals than we see in non-trending markets. There are two ways in my own trading that I look at those reversals in the stock market. One is by looking at an indicator that updates very, very frequently called the NYSE tick. It's the number of stocks upticking at any moment in time minus the number downticking. And what you find in a trending market, let's say it's trending to the upside like we have had recently. If it's trending to the upside, we get downticks. There is selling. People do take profits, and the NYSE tick goes negative, but price doesn't move very much. In other words, it's telling us that the sellers can't move the price, and vice versa if we're trending the other way. So we can look at the ups and downs in the NYSE tick as, quote unquote, the reversals, and we can trade those very profitably on trend days. So that's the first way that we can look at trending and reversals. A second way is, as I've written, the charts that I look at for the stock market, the x-axis is not time. The x-axis is volume. So every certain amount of volume traded, there's an open, high, low, close. And when we look at small amounts of volume per bar, we see reversals. But when we look in time at the whole bar, it looks like it's just kept going up. So we can use a short-term oscillator like an RSI on short-term volume bars, and sure enough, we see the cycles within trending markets. Okay, I think I've said enough. I'll take my meds.
So I had a question here in my chat. So there's one, would you love to dive more into growing versus fighting self comment? Also, is fighting the market actually fighting self? I find it a very, very good question, because perception is projection. And what I mean with that is that whatever you are experiencing, whether it's in the market or in life, you are always projecting yourself into what you see, into your experience. So when you are in the market and you are fighting the market, you are fighting not the market, you are actually fighting some idea that you had what the market should be doing. And when the market is not doing that, you start fighting it. But it is not that you are fighting the market, you are fighting your own, you are defending your own idea and fighting against what is actually happening in the market. So yes, fighting the market is actually fighting yourself. That's why you will never win with the market, because you are actually not fighting the market. The market is doing what it's doing, and you are having your internal battle and something that you are trying to prove, but you are at that moment disconnected actually from what is happening in the market. I don't know if Peter or Brett, you want to add anything to that about fighting the market?
Well, I know in my book, I talk about a quote from Bill Williams is want what the market wants, right? And that ability to, and, you know, as you were talking about being adaptive to the market or adaptive, you know, to yourself, being able to step back and look at what's really happening versus what you want to happen, right? And so, you know, that is one of the struggles, right? That, you know, are you aligned? And a lot of that comes back to stepping back and looking at yourself, being aware of what you're doing, what decisions you're making, why you're making those decisions, what's really holding you back from, you know, you were talking about a drawdown as an example, right? Like what's preventing you from taking your loss and going on. And, you know, a lot of there's so many different things, right? Everyone comes to the market often with wanting certainty. They don't want to be wrong. The ego takes a place. They're fearing that they're going to lose more, but they're just stuck because they want to hope that it's going to turn around. But again, all of those things, if you start to really feel it and understand it and be aware of it, then you can start to see when those emotions start to arise, and when you're going to have a behavior that's counter to what you should be doing, and then you sort of self-correct, right? But that takes time to really feel it. You know, first of all, be aware that you've got a problem, then be aware of what you're actually doing, and then over time, keep correcting yourself slowly, and then you start to build up those habits to be able to take the emotion instead of having a reaction and doing something wrong, but to actually make a logical decision and do what you know is right, right? So.
And there's a follow-up to that, and I'm curious if Brett would like to also chime in here. How do you train your emotions? That's an interesting question, right? How do you train your emotions?
Yeah, I'll mention briefly that it's not so much training emotions, it's training our awareness of emotions. Because if we are quote unquote mindful, if we are aware that we're feeling a particular thing, then we're able to step back and say, okay, what's that all about? Is that really telling me something about the market and how it's trading? Or is it an overreaction? Could it be an overreaction to the market and how it's trading? So I think we train ourselves by becoming better and better trading psychologists ourselves.
Absolutely. I would call it, and that's why I called my company a head coach, because we are becoming a coach of our own head. And with regard to training emotions, I actually teach emotional immunity, and I call that emotional immunity because it is not about not feeling emotions, like Brett said. I mean, the emotions are there. This is what makes us human. So, you know, a lot of times you will hear traders saying, ideally, I would not feel emotions. Like, well, that wouldn't be ideal, because then you would be probably not alive if you don't feel emotions, because emotions are a part of our human experience. And actually, you can use them. They have function. So you can use them to identify a lot of things. These are one of your natural indicators, if you will, that you can use also in trading, but you need to learn how to do it. And by building and developing emotional immunity, you are basically learn to observe your emotions, but also not to react to every single emotion you are feeling. And you are already doing this in your daily life, because I bet that even when you walk on a street, you feel a lot of emotions, but you're not acting on all of them, right? So you can also do that in trading. It is just a matter of developing your resilience and awareness, like Brett said, and making sure that you know the triggers, and that you can control the triggers and not control the emotions. Peter, do you have anything else to add on that?
I was just going to say, as a trader matures, and this isn't just about trading, this is about life in general, right? I mean, we all have thoughts, we all have emotions, and we all have to address those, right? Some people have anger issues, some people have, like, in life, and same thing with trading. The way you trade is a reaction to emotions and thoughts that you have. And yeah, it's like you can start to change the way you think, and by, being aware of it, calling it out, naming it, changing the way you, like, positive thinking, when you find yourself negative self-talk as an example, then you got to call it out and change that, right? But it's an interesting thing as an evolution, as you become aware, as you start to name these things and change them over time. Eventually, also, then you are using sort of your emotions as a gauge, and then, but at some point, as you mature, your emotions then become sort of intuition, right? Then your emotions become, oh, this is it's telling you something, right? Whether it's telling you that the behavior you want to do is wrong, and you stop doing that, or now you get to a point where all of a sudden it's telling you, okay, you're seeing you're seeing the market as what's really happening, and you're feeling this, so go for it, right? So anyway, it's just an interesting evolution.
Yes, very good. And I have actually a question for you, Peter, that is about the evolution. It's about how you were able to translate your strategy from a more intraday approach to swing trading. Did it felt like learning from scratch?
Right. So this speaks to, I talked about being aligned to your strategy, and a lot of that I think I'm talking about initially. Again, when we look at the evolution of a trader, right? Initially, when you're starting, a lot of people start on the wrong track because of, they want to, you need to find something where you're going to dedicate time, get an education on it, get experience, build up your skill set, right? And then if you come out of line because your life changed, like let's say you were a day trader and all of a sudden you needed to get a full-time job, then you're going to shift to another thing. But over time, it's not like, it's not like you're relearning a lot of things, because the markets are, whether you're trading a 5-minute chart or a weekly chart, they all look the same, right? So a lot of the lessons you have, you can bring to that, but also just the point of, as you mature as a trader, you start to have different tools. You can trade multiple methodologies without it being a problem, right? So, for example, when the markets are not trending and there's lots of volatility, you can pull out your day trading skill set, right? And you can day trade while that environment is there. Instead of, if you were a trend trader, you'd have to back off and not do anything if that's the only tool you had in your kit, right? Or, I'm always not necessarily surprised, but every time there's a drawdown in the markets, you hear all these people complaining, oh, I'm losing money, right? It's probably because they didn't have an exit plan. They're just focused on this market. They have an upward bias, and they're not protecting themselves, right? So, but as you have more and more tools, then you can say, okay, this is shifting from a trending market to a volatile situation, and then either go to swing trading or something else, right? So yeah, obviously you got to learn different things, but that's part of when you've been around a long time and you've done lots of markets and you've studied lots of techniques, then it's just practicing and building up that skill set yourself, right? But
yeah. Brett, have you ever day traded, actually?
Oh, yeah. Yeah, absolutely. And especially when I began working with traders in Chicago, the average holding time was 6 minutes.
Oh, wow.
So, yeah, so no one used charts. Uh, they were all looking at order flow and
Right.
the bids and the offers and shifts in the book. So that actually trained me for the short-term trading. There are a couple of questions that came up, and I wondered if I could combine a couple
Yeah,
and
absolutely. Please go
get
ahead.
your take on it, Peter and Agnieszka. Andy asks, how do you distinguish between a trader who genuinely has a psychology problem and a trader who's actually trying to use psychology to compensate for a lack of edge. If you have a genuine psychological problem, that's going to show up in multiple areas of life, not just in markets. So if I have attention deficits, let's say, well, that's going to show up across many areas of life, not just markets. If the problems that we're experiencing occur primarily during our trading, then you get the sense that this is something related to how we're dealing with markets. The problem here, once again, is in the premise: who's trying to use psychology to compensate for a lack of edge? Many times traders talk about having their edge in the market, when in fact, like Victor Niederhofer talked about, markets are ever changing. And so we need multiple edges. We need different ways of trading different kind of markets. And so we may be using psychology to hide the fact that we're relying primarily on an edge and are not able to adapt to different markets that require different edges. And that relates to the question that Yvonne asked, who's trading with prop firms and knew with back testing they could have 5 stops in a row, but this week they had 6 stops in a row and they were frozen. What I can tell you is the traders I work with, if they have multiple stops in a row and they're trading with discipline, the first thing that goes through their mind is, wait a minute, this shouldn't be happening. If I'm placing trades well, and these are tested ideas, and you get stopped out, something in the market has changed. And instead of placing a 4th trade and a 5th and a 6th, you step back and you assess what's changed, what is different. And in this changed market scenario, what edge might I have?
I love that question because I hear also in there actually something of insecurity and not just it's not just about the strategy at that moment, because if you say you were frozen, I would be wondering what made you frozen, because wondering about the strategy usually doesn't make you fearful or frozen, because when you're frozen, there is some part of fear. And I would invite you to start digging a little bit deeper in that. What kind of thoughts came up when this happened? Were you questioning your strategy, but questioning whether it was a good strategy at all, and not just what has changed? Or were you questioning actually your ability to trade? Because this is what happens a lot, that when strategy stops working, a lot of traders will project it on their own capacity and ability to trade, or their own confidence, self-trust, and it starts to spiral very fast, while it could be just the fact, as Brett said, the market has changed and you need to evaluate what has changed. But a lot of times, especially if you don't have yet a strong confidence in yourself as a trader, then this often goes right back into self-reflection, usually ruminating instead of building up. So I would invite you to look into that, what that caused you to think about yourself as a trader there.
I always have this argument with people. I have trader friends that are automate their trading, right? And they back test and they know it's got an edge over time. And they'll make the same comment. Oh, but there could be, 8 losses in a row. And I'm like, Okay, but you don't have to Brett's point, you don't have to sit through 8 losses, right? Now, if you've automated it, and that's a little different, but if you're a discretionary trader and your backtesting shows that there could be 5 losses in a row, I would argue chances are those losses are happening when there's a change in market sort of structure, right? So the question then becomes, how quickly can you identify the change in structure versus, just it's not working because of some other reason, but chances are it's a change in structure and you should be stepping back and either reducing your risk or not trading at all until it gets back in sort of line, right? So anyway, it's an interesting dilemma of, again, knowing what the market's doing, being able to adapt to it. And when you're starting to have a drawdown, you don't have to sit through it, right? You can always not trade, right? So this, anyway, that's a good point.
Yes.
Agnieszka, can I jump to another question here?
Yes, absolutely, please.
Yeah. So there's a good question here from Rodrigo. How important is generosity in the makeup of a trader? And some mentors give freely of their time and insights. How important is the emotion of generosity? One of the things I'm writing about in my book, as a difference now compared to, let's say, 10 or so years ago in the market, is that trading has become much more of a team sport. At the hedge funds where I work, years ago, there used to be many individual portfolio managers. And once in a while, then they would hire an assistant who would help with execution and so forth. Now it is almost impossible at the large funds to find individual portfolio managers. All trading is done as a team because there are so many markets to follow on so many time frames, so many news items coming out, earnings reports, and so forth and so on, that you need a team of people to keep on top of everything. And so what you're calling generosity is often sharing ideas within an informal team, or sometimes it's a formal team. People are sharing ideas and making each other better. And that kind of generosity, where each person is mentoring the others, and you're creating either real teams or virtual teams, that's increasingly common.
That's great. And I just want to make another point about generosity. And I know, Brett, you talk about this, and I mentioned earlier about the blog you wrote recently about the rest of your life is the best of your life. And the underlying premise of that is that you really have a purpose in life, right? You have something that you're driven for. And I know there's a lot of traders who have a passion. They want to donate their profits or some of their profits to some organization or something. Like that's a big passion for them, right? And that I'm looking at that as a generous thing that helps them to really commit and take trading. Like a lot of people do not take their trading seriously, right? They don't take their money seriously. They sort of start, they do a bit of work, but they're not really to really do the work involved in order to break through to that consistent profitability. But if you have some passion or something that's driving you, a purpose that's bigger than you, then oftentimes that helps to really make you be the person you need to be in order to be successful, right? So anyway, just another take on generosity. But
Absolutely.
Great point.
Yeah. What is interesting, going back to Brett and the teamwork, vulnerability is another one that has to do with generosity, because if you are working in a team, whether you are in a team in a company setting, but also in a chat room with or in a group with other traders, you can be only generous if you are willing to be vulnerable, because sharing your own ideas requires you to expose yourself, to put yourself out there and actually dare to say your idea. And in the market, it can be very tricky. And you see it a lot of on social media. People will post things like, this is what happened. I knew it, or I predicted it. And they will put it afterwards, right? Afterwards, everyone is a genius. We knew what's going to happen, right? And the stock went up, and now I made money. And But vulnerability is really sharing your idea before it happens, before everyone knows what is going to happen. And also, if you give honest feedback to someone, that requires you to be vulnerable as well, and to open yourself up for even receiving feedback. So I think that that plays together with the generosity, because if you are there for others, you cannot do that without being vulnerable. And vulnerability is one skill that you will need when you are just you in the market, because you have to make transactions without knowing what's going to happen, and be willing for the market to hurt you, so to say. Because if the trade doesn't work, you have to be vulnerable enough to take that loss and not fighting. Oh yeah, there was one question about what other indicators we can use to identify our emotions are influencing our playbooks. I don't know if there are any indicators like chart indicators, but from my perspective as a mindset coach, I think our body and our mind is our indicator. So when you read your body and when you read your thoughts, you will know whether your emotions are influencing your decisions. And that is a skill that anyone can learn. And it starts with awareness, building awareness of what you are feeling, what you are experiencing, of your internal dialogue. How do you talk to yourself, and how do you talk yourself into and out of decisions and trades?
Agnieszka, just super quickly, in my recent book, I talk about the newer generation of portable biofeedback devices that measure brain waves. And we have different brain waves when we're in an emotional state than when we are focused and have full concentration. But when we get real-time feedback about our brain waves, we can actually practice things like meditation and literally train ourselves to stay more focused, more calm.
Yes, it's a great part of that book. So guys, really, you got to read that book. And Brett, you are using that device yourself, right?
Yes. It's a device is called Muse, M-U-S-E.
Muse, yes. Yeah. That's awesome. And one about the habit tracker. So I don't know how many of you are familiar with the Good Habit Tracker. That is something that you can get on my website, aheadcoach.com. It's a free tool. And the question is, how many people are using the Good Habit Tracker? It's a very good question, Jerry. What I can tell you is that several thousands of traders have downloaded the tracker. How many are using it? I cannot tell you that, but it's definitely less than that. And I know that because that's a very human thing to do, starting something and not finishing. And especially with tracking habits and with building habits, that is one of the challenges that most traders are facing: consistency. And habits can be built only by consistent repetition. And those who are using the habit tracker, they definitely have been reporting great results. But consistency is the biggest challenge for people to sustain. And that's something that trading requires: sustained repetition, even when it's boring. There is a question: can you give us some advice on how to manage trading and work outside the market? I would say let's take this question maybe as a balance between trading and work.
Well, I know for myself. Sorry, go ahead.
Yeah.
No. You go, Peter, and then I'll respond.
Okay. No, I was just gonna mention that, for the majority of my career, I worked at a full-time financial position that had nothing to do with trading, right? Yet throughout that time period, I was trading, right? So again, it's speaks a little bit about the alignment again. Okay, you got to find a methodology that can work in that environment. So not only does your trading have to be done sort of after hours, or your decisions made after the fact? And then, you can, so chances are then you probably need a longer term strategy, because obviously you can't day trade or do short term swings, because unless you can actually look at it during your workday. So again, it's about finding, and then it comes back to that other question: how much time do you dedicate to trading? And I don't know, Brad, if you had to count up all the hours you've spent studying and Agnieszka, studying the market, trading, evaluating, it's lots of time commitment, right? And in order to become successful. And I think a lot of people, if you have a full-time job and you want to trade, then, you need to put time aside to learn it. You need to put time aside to practice it, and you need to be willing to do that, right? But also not to be too, again, people think they can learn to trade in a week, right? You don't have to necessarily trade in order to learn trading, right? You can take a long time to study it and evaluate it. And to your point, Brett, about these people looking at the charts every single day, right? You can do that and still get something out of it, right? So anyway, finding that balance, but I think there's a lot of people that go the opposite, right? They're trying to day trade while they have a full-time job, and they're getting, they end up getting fired, or they can't do either one well, and they're unsuccessful at their career and at that they're trading. But yeah, or there's a lot of people that aren't really traders, or gamblers, or they're in it for the excitement, they're in it for the game, and they could just be putting on positions during the day. Anyway, it's about, again, finding out what you want and what time commitment you have, and if you have a job, being able to fit it all in, right? But have realistic expectations about what's really involved and what's needed in order to succeed.
And just to jump in, Peter, you make good points. If someone has a full-time job, but is wanting to teach themselves longer term trading, more swing kinds of trading, they don't have to be glued to the screen moment to moment every hour, and it won't necessarily interfere with their work. I know when I learned trading, I was working full time, but my job didn't start until late morning. And so I trained myself in the early morning market hours. And to this day, that's when I'm most profitable, is in the early morning. But I managed to balance in that fashion. There's a question here on following your intuition. And I'll just mention very quickly that intuition is only valid when we have fully immersed ourselves in markets for extended periods of time. In other words, if I haven't played golf, well, do I have any great intuitions about golf playing? No, I don't think so. Intuition comes from immersion. When we immerse ourselves day after day after day after day in markets, we get a feel for things, and that's what we call intuition. And so if we haven't done that immersion, then what we're calling intuition might just be random thoughts and feelings. If we have immersed ourselves, then intuition can be a very valid guide to pattern recognition.
Absolutely. And I have, by the way, an entire podcast episode on intuition. So if you want to check it out, it's Confidence in Trading podcast on all major platforms. So I highly recommend it. And one thing about intuition, sometimes like intuition does not replace a strategy or a plan. That, a lot of times traders will say, yeah, but, I felt it was good. I felt, and they use that as an excuse for not having a plan. Oh, I just trade with my intuition because it's easier. This is not a good excuse. Do not use intuition instead of a good preparation, good strategy, and good plan. There was a question about visualization exercises. The answer is yes. Definitely visualization exercises for your setups, for your execution, for how to handle your losses, how to handle yourself in trading. visualization will help you, and there are different techniques, and we could fill an entire workshop on visualizations only, but there's a lot of different techniques you can use to train your brain on certain responses that you want to have preemptive. So before you are actually sitting in front of the charts, your brain does not recognize whether you're imagining something or when something happens in real time. So you can train your brain to respond in certain ways. So when you are sitting in front of the computer and you are in the same situation, it's easier for you to manage yourself the way that you rather do, and the way that is in your best interest.
If I could jump in, now
Yes.
I'll be the psychology professor.
Yes.
So if we do the visualization when we are in a highly focused state, we're very calm, we're highly focused, maybe we're doing some kind of meditation, maybe we're working with those biofeedback devices, but we do the visualization when we are in a highly calm, focused state. Then during real-time trading hours, what do? We get ourselves back in that state, because it turns out that much learning is what psychologists call state-dependent learning. We best recall what we have studied or practiced when we're in the state that we were in when we did the rehearsal. So we get ourselves in real time in that nice, calm, focused state, and everything we've been practicing during that state comes back to us.
That's amazing. And this is why forcing discipline doesn't work in trading, because it brings you into stress and pressure. And that's one thing that we as traders need to do, is to decrease pressure that we are in, so that we can think rationally and not set our survival response off while we are trading. So thank you so much, Brett, for that. This is very helpful. There's a question about my a little picture behind me with a little cat. Where did I get it? It's here. I think probably Amazon. Where do you get things these days, right? I am not I'm not crazy about shopping. Amazon is my favorite things, quick and easy. The habit tracker is not the same as Traders Think. The habit tracker is basically a sheet that helps you track your habits. The Traders Think is a tracker for your trades, for your stats, for analyzing your trades, for replaying your trades even. So totally two different things. Any last thoughts, Brett, Peter?
One insight I'll share is that typically at the hedge funds, they are not just looking at one market, they're looking at multiple markets. And many times the themes they trade are related to how the different markets are moving. So, for example, they might look at different sectors within the stock market. Like in overnight trading right now, the S&P 500 futures index, it's up, but the NASDAQ's down. What's that all about? Why isn't it following through to the upside? Questions start to come up when we follow different things. But they also look at interest rates. They also look at currency, the dollar, because all of it together talks about a theme. Maybe the theme is inflation, and we're seeing that in commodity prices. We're seeing that in interest rates. We're seeing that in certain sectors within the stock market. So you look for themes across markets and within markets, and those often alert us to those changes in market composition.
How do you overcome the psychology of always being wrong? My strategy has a positive expectancy, but the win rate is very low. My first question that comes in is, always? Is it really always, or is that your experience? oh, my trading is terrible, and then you go and look at your stats, it's not that terrible. So a lot of times what is does not reflect how you experience it. So I'm curious, like if you say my win rate is very low, that means you're still winning, right? But you say you are always being wrong. Is the strategy not working? Or do you think you're making always a wrong decision? And that's totally two different conversations.
You could have a valid trading approach that has a 30% win rate because the average win size is so much greater than the average loss size.
Right.
But what you would want to do is then drill down to the signals that are valid, that are winning signals, and look at how they set up. Look on the finer time frame to what tells you that the trade is working out, so that in real time you can get bigger in those positions. And that allows you to have the lower win rate, but still be quite profitable.
Right. So from the practical perspective, there is like it's a very rational approach. If you think that you are always wrong, this will impact your decisions because you will be hesitating on entries, especially on those moments that Brett says you can increase the size. When you believe that you are always wrong, you might be hesitating in those moments to actually pull the trigger. So I think those are two different things, and it's worthwhile diving into that always being wrong and what's behind that.
One last one, because Marcus asks the question about recognizing that there's a market change, but the execution doesn't always match the speed of my acknowledgement. Now, that's partly an issue of how execution is done. And at the places where I work, there are amazing execution shortcuts and how you can get in positions and size them properly with just 1 or 2 clicks. But acknowledging the market change, being aware of it, obviously that's going to come first. And then the question becomes, is there any hesitation in acting on that acknowledgement that would delay execution? So you want to train yourself to not only have the awareness of market change, but to be aware that this is a call to action and to be able to act on it promptly without overthinking it.
That's so well said, without that moment of questioning yourself, right? Because that's usually where it goes wrong and takes you completely sideways.
I'm just going to make a point. It's not just when markets are changing either, right? It's about when you're getting an entry signal. So some people try to enter too early and some wait. And by the time either they enter something that doesn't end up being confirmed and then it wasn't a valid trade to begin with, or they wait too late. And by then they've lost their edge as far as the potential alpha, right? So anyway, I think it's, again, it's being able to execute timely and being able to follow your rules according to plan, right? Because otherwise you're maybe missing a lot of the gain. So
super point, Peter. Perfectionism can get in the way, that we recognize that things have changed, but then we become perfectionistic about the execution and end up missing opportunities as a result.
Yes. One of the very common patterns for many traders, perfectionism. I wrote the blog about it too, by the way. So check out my blog. I wrote blogs about different patterns from traders. So perfectionist is one of them. Speaking of execution, that was the question I was looking for. Is about, I hear all of you saying something similar. We have our process, but we can't follow it at all times. Given the accessibility to professional level coding from AI, what are your thoughts on coding our strategies and therefore outsourcing all execution? Very, very good question. I wrote about blog about that too, but in short, from the mindset perspective, yes, absolutely. The only question is, do you have the resilience and do you have the patience and all the skills that trader needs to let the robot do the job? Because a lot of traders will use coded systems to do the execution, but most of them, they are still not fully automatic. You still have to switch them on, you still have to switch them off. And if the system is not doing the transactions because it doesn't see opportunity, a lot of traders will sit there and start messing up with the coding because they will feel like they need to make executions. So definitely, yes, if you can actually follow the system of the coded system. And if you cannot follow your regular system, usually that's the same problem that you just bring into a coded system. But I will give Brett and Peter also a chance to comment on that, because maybe you have a different experience.
No, not really a different experience. I do have hedge fund managers that have delegated a great deal of research work to AI, including they take all of their trades from a past period of time, program those trades into Claude, and then in real time, Claude can identify for them when the market is setting up in a way that they have traded successfully.
Oh, wow, that's awesome.
Yeah, so the AI becomes your analyst. It becomes your support. Amazing applications of AI that we're starting to see in the professional trading world.
Wow, that's fantastic. I see also a lot of my students using AI for different type of not just research, but also analyzing their trades and having AI giving them feedback on their trades. So definitely something that that you can use to help your development, not necessarily replacing. Like most traders that I work with, they love trading. So if you're trying to replace the problem with the robot, with the coded system, this problem that you have is going to show up somewhere else. So that's how life works.
I suspect within a couple of years, the way people currently trade will seem awful archaic.
Thank you so much. I really want to be respectful of your time. You have given us so much more time than we originally agreed. Thank you so much, Brett and Peter. I'm so humbled by your willingness to do these sessions. And we have been working now for, I was just thinking, Peter, 5 years or 4 years, and Brett 2 years. So I really appreciate your willingness to do this and your relationship. And you're always so full of ideas to share with traders. So thank you so much from all my heart. And I hope, guys, that this was helpful to all of you. Also, thank you, Vanessa, for doing a great job with the questions, making sure that we are not missing anything. Also putting some quotes from our answers into the chat and putting all the links. One more time, if you would like to register for the free masterclass I will be giving on August 19, it's tradingmindsetmasterclass.com. I would love to see you there. We'll talk more about compassionate discipline, the foundation of it, and I will teach the 4 I's of compassionate discipline. So I look forward to that. Brett, Peter, thank you so much.
Thank you very much. Thank you, Peter. And thank you, Vanessa, for handling all those questions. Really appreciate it.
Good luck to all the participants here on your trading journey. And hope you got something out of the session here.
Thank you, everyone. Have a good night. And hopefully we will see you next time. Thank you.
Bye-bye.
Take care.